Hello everyone, today is November 7th and Annie has some news about Shein's IPO to share with you. Shein is a cross-border fast fashion e-commerce platform primarily targeting young women. It directly sells fashionable items such as shirts and swimwear to customers, with each item priced as low as $2. The company gained significant popularity during the pandemic in the US and quickly became one of the largest shopping applications with the highest number of downloads. As a giant in the fast fashion e-commerce industry, Shein has become experiencing rapid growth and is now at the threshold of an IPO. The question is, can they successfully go public with their target valuation? On Monday, it was reported that Shein is preparing for its final steps towards an IPO in the US and aims for a valuation of up to 90 billion. However, this valuation is significantly higher than what Shein has achieved in private transactions. Moreover, considering the market's volatility, the timing of Shein's IPO remains uncertain. Insiders say that Shein has expressed to potential investors its desire to achieve a valuation of 80 billion to 90 billion during the IPO. Nevertheless, the valuation of Shein in private transactions has been lower than the 66 billion valuation they obtained in the funding round in May. Shares traded in the secondary market recently valued the company at around 50 to 60 billion. Analysts point out that while private transaction valuations don't necessarily reflect the actual value of a company, the grand plan for Shein's high-profile IPO may become more complicated due to challenges posed by market turbulence. In 2022, Shein was the third most valuable startup globally, with a valuation of 100 billion during that funding round. Since then, due to uncertain economic prospects in the US and rising interest rates, investors have become more cautious about risk assets. The valuation of both Shein and other startups and tech companies has declined. For example, ByteDance's valuation in the secondary market fell below 300 billion in July, representing a decrease of at least 25% compared to the previous year. In addition to US market, Shein has become actively expanding into the Turkish market. Why would Shein, along with Alibaba, invest in Turkey? Here are three reasons. First, Turkey serves as a bridge between Europe and Asia, connecting the Black Sea and the Mediterranean, offering access to Europe and the vast Middle East region. Secondly, Turkey is a significant producer of textiles and clothing, supplying a large portion of Europe's textiles and clothing needs. Thirdly, Turkey has a population of 85 million, which is relatively young, making it a promising e-commerce market. Alibaba has recognized the potential of the Turkish market and acquired a majority stake in
Manual,
which is becoming more like the Turkish version of Taobao. Besides, being an e-commerce platform,
Manual,
offers logistics, food delivery, payment services, and has established a second-hand trading platform similar to Xianyu. However, the competition in the Turkish e-commerce market is fierce, and becoming the Turkish version of Taobao is not an easy task. In 2022, the top three e-commerce platforms in Turkey, they are all local platforms and collectively account for 51.5% of the total market share of the top 100 e-commerce platforms in Turkey. Amazon Turkey ranks 5th. In addition to facing Alibaba's challenge in Turkey, Shein also faces competition from Temu, a subsidiary of Pinduoduo in US. According to an analysis of credit and debit card transactions by US consumers in September, Temu's sales in the US were more than double that of Shein, surpassing Shein for the first time in May. Now that Shein is fully prepared for its IPO, the question is whether they can ignite market investor interest in the current economic environment within the context of its own prospects. So that's all for today's news, and we will bring you more information tomorrow. See you, bye!